Hi everyone, so this is Adam, and today I want to speak about real estate investments in Cambodia because this is something a lot of people, a lot of friends, associates, clients, whatever, have asked me about, and this is just my personal opinion about investing. Now, first of all, it depends what purpose you're investing for. I mean, if somebody has a Cambodian partner or husband or wife or whatever, and they want to invest in Cambodia just to have a house, just one house that they can call home, and they're not really interested in it as a pure investment, I think that's a decent idea in some cases. But also, if somebody has so much money and they're just investing a very small percent of their wealth, let's say a multimillionaire who wants to invest $100,000 in the market. Again, that's not a big deal because if you've got a small percent of your wealth in any asset class, that doesn't necessarily always cause problems. But for people who are putting a significant amount of their money into Cambodian real estate, they have to consider the following things. Firstly, it's an illiquid investment. Like any real estate investment, it's an illiquid investment. Yeah, it's like it's common sense really. If I have here, right, I have some medicine, right. Imagine this was gold or anything you can hold or touch. You've got to find a buyer for that, right? And it's often not as easy as you think. I mean, I have a good friend in Jakarta, in Indonesia, which is a far bigger market than Cambodia, and they haven't sold for about a year or 18 months. And running, they still haven't sold it. I know one or two other people who have bought land in Cambodia, and on paper it's gone up in value, but they've been trying to sell now for 2 years and they can't sell it. So you have to remember, if you invest in real estate in any country, essentially it's worthless unless you can find a buyer, and you're probably not going to find a buyer quickly. Whereas in terms of cash in the bank, it can be withdrawn instantly, and investments in the financial markets can usually be sold instantly, and it can be in your bank account within sometimes the same day, sometimes it takes a few days, but quickly. So liquidity is the big one, but I think also the risk relative to the reward is very high. Now you take it, financial markets, let's say developed financial markets like the US market, like a few others, like Canadian stock market, they've consistently performed very well over time. So the average rate of return has been about 6-7% in inflation adjusted terms. Now that doesn't sound like a lot, but compounded, that is a lot of money. I know at the moment Donald Trump is running for US president, and there's been a lot of commentary on the fact that even though now he has about $5 billion, and when he inherited his wealth it was about $200 million, if he would have simply put that $200 million into a reasonably performing tracker fund, it would now be worth more money than he has. It would be worth about $9 billion, because over a long period of time, 6 or 7% adjusted for inflation is a lot. If inflation's running at 2%, you're making 8%, that's only 6%. You're not going to notice that in a year, but over a long period of time, that extra performance makes a difference, and equity markets do outperform over the long run. And this is something that property bugs don't really get, like gold bugs. If you ask, let's say you asked 100 people in Cambodia or many countries, okay, which investments have performed the best? Many people would say gold or real estate. And it's true that in some periods of time they performed excellently. But actually, I mean, there's been many times when they've gone down, and in the 80s, in many markets, they were higher than now in the case of silver and gold. In the case of real estate, really, when you look at it, real estate has not performed that well historically. It's done worse than equities. Even the last 10 years, I mean, let's say in markets like Jakarta in Indonesia, it looks like the price has done really well, doubled. But once you adjust for the fact that the currency is very unstable, and also you adjust for the fact that it's over 10 years. Remember, 10 years is quite a long period of time. Actually, the price hasn't gone up that much. It's doubled often in local currency terms, but when you adjust for the fall against the dollar, that's more like about 60%. And over 10 years, 60%, that's only about 4%. And that's even before you consider all the other costs. And that's a very small return compared to what's been seen in equity markets, even though equity markets have been very unstable as well. So really, you have to consider what's the benefit of investing in Cambodia compared to investing in equity markets. But also, even if you want to invest in real estate in any country, why Cambodia? I mean, you've got a market like the US, which has very good investor protections. It's very unlikely there's going to be a political revolution or major upheaval. It's very unlikely that foreigners are going to be discriminated against in the foreseeable future. You've got even countries like Greece, you've got Portugal, you've got countries where there's really bargains to be had. So why would you consider Cambodia now, which isn't an ultra cheap property market? I mean, essentially you're buying in the mid-range of the market, but getting high risk. At least if you can have high risk, it's okay if you're paying a small price. But in many cases in Cambodia, you've got condos which have been sold for $100,000, 70, 80, 90, 100 and up. Well, in which case, if it's that much money though, you may as well invest in a more stable market. That's my opinion. I know some will disagree, but I hope you found this interesting. And one more point actually before I go is you have to bear in mind something else actually. With property, you can't buy the whole market. What I mean by that is, if you invest in, say, a tracker fund or a fund that's tracking loads of companies, that's a lower risk. Let's say even you're bullish about property markets, a far safer bet would be to invest in a property fund which tracks thousands of property companies and construction companies, and therefore even if one company performs badly, as a market it's probably going to do well. Whenever house prices have gone up in the UK or US, those funds have done well, and when house prices have gone down, those funds have done less well because they're still tracking, of course not completely, because a construction company might do well for numerous reasons, including the management and other things, but it's still tracking the market, right? Whereas, unless you're incredibly wealthy, even if you're a multi-millionaire, you can't just buy 100 properties, 1,000 properties. You're going to be investing in a small selection of properties. Therefore, if you get it right, you're going to make much more than the market. You're going to outperform easily. If you get it wrong, though, you could even lose money even when the market's going up. And it might not be your fault. For example, in the UK, which is a very regulated market, a close member of my family lost money after a mobile phone company put a mobile phone mast close to his house. And because of the cancer risk and all the worries about cancer, he lost tens of thousands of pounds and, of course, dollars as well, just because he couldn't sell his house unless he really dramatically lowered the price. And he couldn't help that, right? So, I mean, even if you're bullish on property, you may as well just go through funds. That's my opinion anyway. So I hope you found this interesting and controversial maybe, and I'll upload something soon.